Grab has become one of Southeast Asia's largest technology companies. But could it also become one of the region's best long-term investments? Let's find out. Most people know Grab as a ride-hailing app, but the company has evolved into something much bigger. Today, Grab offers transportation, food delivery, groceries, digital payments, insurance and financial services through one platform. This business model is called a SuperApp, combining multiple daily services into one ecosystem. Grab operates across Southeast Asia, serving a population of more than 650 million people and over 50 million monthly transacting users. One of Grab's biggest advantages is the rapid digitalization of Southeast Asia's economy. Every year, millions of new consumers begin using online transportation, shopping and payment services. As more users join, Grab's network becomes stronger for drivers, merchants and customers alike. After years of losses, Grab achieved its first full year of net profitability, marking an important milestone in the company's history. Fourth quarter revenue reached $906 million, representing 19% year-over-year growth. But transportation may not be Grab's biggest opportunity in the future. Financial services could become Grab's highest margin business segment over the next decade. Gross merchandise value reached $6.1 billion during the fourth quarter, growing 21% from the previous year. Artificial intelligence is helping Grab improve routing, pricing, and customer service while reducing operational costs. Improving efficiency is becoming one of the company's strongest drivers of profitability. However, every investment comes with risks, and Grab is no exception. Ride-hailing and food delivery remain highly competitive industries with relatively low profit margins. Companies often rely on promotions and discounts to attract and retain customers. If competition intensifies, profitability could quickly come under pressure. Government regulation could also increase labor costs for drivers and delivery partners. Growing financial services also introduce credit risk during economic downturns. Grab remains heavily dependent on Southeast Asia, a region with more than 650 million people and an annual on-demand gross merchandise value exceeding $22 billion. Investors should also keep an eye on regional competitors that continue expanding across the market. Technology leadership can change surprisingly fast in rapidly growing economies. When reviewing Grab's earnings reports, investors should focus on several key metrics. Revenue growth, user growth, and platform engagement remain essential indicators of future performance. Cash flow and operating margins provide an even deeper look into the company's long-term financial health. The fintech business deserves special attention because it could become Grab's primary profit engine. At the same time, investors should monitor how much Grab spends on incentives and customer promotions. Grab represents one of the most interesting ways to invest in Southeast Asia's digital transformation. The real question is whether the company can convert impressive growth into sustainable long-term profits for shareholders.